Just imagine if you could quit your 9 to 5 and not lose sleep over your mortgage. Sound impossible, right? Well, what if your mortgage could be the very thing that makes a career transition less terrifying? Would you be open to a completely different kind of home loan that gives you the freedom to take that leap? Hi, I'm Mike Wise. Welcome back to Mortgage Wise and the All-in-One Loan channel. Today, we're uncovering an unconventional way to make a bold career move without the financial fear. This isn't your parents' mortgage advice. I'm talking about the all-in-one loan, a revolutionary mortgage that combines your home loan with a checking account, giving you instant access to your money whenever you need it. The way it's always been done isn't always the best way, and the all-in-one loan flips the script on a traditional mortgage. The problem, many of us dream of stepping away from the daily grind, starting a new business, retiring early, or just taking that sabbatical that you've always wanted to do. But one massive roadblock often stops us. It's that monthly mortgage payment that shows up like clockwork every single month. With a traditional 30-year mortgage, if you stop working, the payments, they don't stop coming. Your money is locked in your house, and if you need it out to fund a startup or just cover bills during a gap, you'd have to beg the bank for a refinance or a line of credit. And good luck qualifying that without a W-2 income job. It's rigid and unforgiving. The all-in-one loan solution is your built-in safety net. How would you feel if your mortgage worked more like a bank account, letting you deposit money and pull it back out whenever you want? That's exactly what the all-in-one loan does. It lets you do that no matter what. It merges your mortgage with a full-service checking account. Every dollar of your paycheck, bonus, or savings that you deposit goes directly to reduce your loan principal. Yes, immediately, which shrinks your interest costs. But here's the kicker. That money is still yours. It stays available for withdrawal at any time you want for bills, investments, or emergencies. Liquidity and home equity all in one. Imagine the freedom that gives you to make a career transition. You've got an instant built-in cash cushion. Stepping away from a steady W-2 paycheck becomes far less scary when you know you can tap into your home's equity on the fly without applying for a new loan or refinance. One AI user, Glenn, he's self-employed, and he shared that if he goes a few months without a paycheck, he isn't obligated to make that huge payment. Whereas when he has the great month, he can dump all that extra cash into the all-in-one loan and knock down his balance fast. That kind of flexibility is unheard of with a conventional mortgage. Try asking a 30-year fixed rate loan to take a break when your income dips. It's not gonna happen. So why does this really matter for entrepreneurs and early retirees? Well, if you're planning to launch a business or become your own boss, you probably know that banks want to see 2 years of steady self-employed income before they'll even approve a new loan for you. But with the all-in-one loan setup ahead of time, ideally while you still have your W-2 income, you essentially are pre-approved by yourself for future funds. You can use the equity you've built for a startup or to bridge some type of other funding, or to just float living expenses during the lean early months of your new venture. No jumping through hoops like through that mid-transition. Your mortgage, it becomes your silent business partner, providing liquidity when you need it. Thinking about early retirement or a mid-career sabbatical, the all-in-one loan has your back there too. Maybe you want to travel the world for a year or switch to a lower paying passion career. With the traditional loan, that big monthly payment is still due, rain or shine. But with the all-in-one loan, if you've been parking your extra cash in the loan, your required payment can shrink as your balance drops. In fact, it's possible to weather a low income period by letting interest temporarily accrue, since the interest can be drawn from your available credit. Then pay it down when you're earning again without penalties. In other words, You set the pace. During high income times, you can sprint ahead, pay off the loan during those times. And then when you're not, you can ease off. The loan adapts to your life instead of the other way around. Look, liquidity equals less risk. Don't lock your money away. Here's a thought. If you have 3 options that you're considering a big life change, like quitting your job, you can do nothing and stay in the job you've outgrown because the mortgage handcuffs you to that job. Or you can take the leap with no net. Quit and hope that your savings and luck don't run out before you find your footing. Yikes. Or 3, leverage the all-in-one loan. Use a financial tool designed to give you a safety net, keeping your money liquid and working to reduce your debt at the same time. Look, option 3 is where you dramatically reduce risk without sacrificing your dream. By keeping your emergency fund and idle cash inside the all-in-one loan, you're effectively making those dollars do double duty. They act as your cushion and they knock down your mortgage interest when they still sit there. Traditional mortgage thinking is throw every spare dollar at your mortgage, pay it off faster. Sure, that saves some interest, but then those dollars are gone, locked in your home's walls. If an opportunity or crisis comes up, you can't easily get that money back out. The all-in-one loan, it solves that, and it solves that problem very easily. As one all-in-one loan borrower put it, with a conventional mortgage, they could pay down principal with savings, but getting that money back would have been difficult, time-consuming, and would have cost us money. With the all-in-one loan, every deposit reduces your debt without removing your access to cash. You don't have to choose between paying down your mortgage and having liquid savings. You can do both simultaneously. Look, here's a real life example, a smoother career jump. Picture an aspiring entrepreneur. Let's call her Sarah. She has a stable job and a hefty mortgage, but also a dream of starting her own design firm. She saved $50,000, which under a normal plan, she'd keep that in the bank for emergencies while making minimum mortgage payments. If she quits her job, that $50,000 might vanish quickly, especially with a $2,500 mortgage payment due every month. Scary, right? Now, imagine Sarah has an all-in-one loan. She puts that $50,000 into her all-in-one account, and one day, instantly, her mortgage balance drops, her interest costs plummet down. Her $50,000 is now inside her mortgage, effectively earning her the mortgage interest rate by cutting what she actually owes. If Sarah needs that money for a business expense or bills, she can withdraw it on demand. Her $50,000, it hasn't disappeared into the mortgage. It's more like sitting in a high-powered financial engine, reducing her interest burn rate until she needs to pull it out. With this setup, Sarah can afford to leave her job and launch her new business, knowing that her home's equity is a flexible financial resource rather than a trap. She dramatically lowered her financial risk in those critical first months of building her company. Now, I'm not sure if this is for you, but imagine your life with this kind of financial agility. Just think if your mortgage wasn't a straitjacket with a new career or a life choice that you wouldn't be exploring. The all-in-one loan, it makes scenarios possible that would sound crazy with a traditional loan. It's designed for folks who consistently spend less than they earn. So they keep on reducing their balance and trending down. If that's you, the benefit can be huge because every positive dollar in your budget can go towards your balance and stay available if you need it. It's like having your cake and eating it too, financially speaking. At this point, you may be thinking, this sounds amazing. What's the catch? A healthy skepticism is good, and it means that you're paying attention. But the all-in-one loan, it isn't magic, it's a tool. You still need to repay what you borrow, and if you treat your home as like an ATM with reckless spending, you could get in trouble just as if you would a regular credit line. Also, the all-in-one loan, it comes with a slightly higher interest rate than a 30-year fixed rate mortgage, and the rate can adjust with the market every month. That's the trade-off for all of this flexibility. But here's the thing, because you have control over the balance, you can offset that higher rate by keeping your average balance lower and by saving potentially tens or hundreds of thousands of dollars in interest. The refinance fees over the life of the loan, no problem. Many borrowers find the net benefit far outweighs the marginal rate difference. In essence, you're paying for an optionality to use your money when you need it and how you want to use it. You're not begging the bank for it. And for somebody who wants to make that big career move, that flexibility is priceless. Now, the all-in-one loan is ultimately about empowerment. It's about rewriting the rules of home finance so that you can pursue your career and life goals on your terms. Ask yourself, how would you feel if you could walk into your boss's office tomorrow and say, I quit, and know that your mortgage isn't a shackle, but a safety net? For many savvy professionals, that's not a fantasy. It's exactly what the all-in-one loan has enabled them to do. What happens next is up to you. You can stick with the status quo, or you can explore this innovative path that's helping people take control of their finances and their futures. If you got this kind of the wheels turning with you, do me a favor, hit the like button and subscribe to the All-in-One Loan channel for more eye-opening insights on smarter mortgages and money. If you know someone itching for a career change or a break, share this video with them. You might spark the breakthrough that they need. And when you're ready to see what the all-in-one loan can do for you, click on the link below. You get a chance to chat with me and qualify to receive $250 towards your closing costs on your next loan with us. I'm not sure if this is for you, but that $250 could be the start of your journey towards financial freedom. What happens next is up to you. Take that next step towards your dream, and thanks for watching.